tasty beverage. Let's get in the groove. Synchronized slurp now, we're on the move.
Good morning, stackers. Yeah, we're feeling fine. Good morning, stackers. It's podcast time.
Talking gold and silver and crypto too. With Joe and the gang, it's what we do.
Good morning, stackers. Yeah, we're feeling fine. Good morning, stackers. It's podcast time. We're stacking sats, we're stacking gold. In the world of finance, real gold. Every sip, every chart, we're on our way to financial freedom, come what may.
So grab that tasty beverage, let's get in the groove. Synchronized slurp now, we're on the move.
Good morning, stackers. Yeah, we're feeling fine. Good morning, stackers. It's podcast time. Good morning, stackers. Yeah, we're feeling fine. Good morning, stackers. It's podcast time.
Is sell in May and go away an actual thing? We'll do some historical data stuff. We'll take a look at it. It is the 1st of May today here in Melbourne in Australia. Yes, I know it's not the 1st of May in other parts of the world yet because Australia is in the future. You can just get a total financial win just by watching us because we're in the future. Does that make sense? No, not really. But we will be talking about sell in May and go away, live gold, silver, Bitcoin analysis and crypto stuff too. We'll take some chart requests if we have time. All this and more. If you're watching this on the replay, use the time codes below to go to your favorite part. But if you're watching live, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main, live on X and on YouTube right now. But please grab your tasty beverage. I grab mine, you grab yours. We'll grab them together. We'll synchronize slurp. Do the synchronized slurp. You audibly slurp your beverage, whatever it is that you're drinking. Let me know in the comments. We do it together. We do it often. We do it every single day. And you love it. Here we go. 3, 2, 1, go. Extra long, extra slurpy, just the way Jason Ashworth likes it. I am Joe Main. A stacker of precious metals since 2010, a stacker of crypto since 2013, worked in the gold and silver bullion industry. Over 3 major gold and silver bullion dealers here in Australia. I served thousands of customers. I also created some amazing social media content, YouTube videos, all those ones that you've seen me do. You've heard my voice, you've seen my face, and now we get to hang out weekly, every single weekday. With Good Morning Stackers, brought to you by Perth Bullion Exchange, perthbullion.com.au, Wealth Stack, Wealth. I'm on autopilot there. Perth Bullion Exchange, perthbullion.com.au, and Mastering the Markets, masteringthemarkets.com. Let's do some shout outs. The early birds catch the shout out worm. Pete Repeat says GMS. That's the calling card everyone does. GMS for Good Morning Stackers. Ben Ferrugia. It's been a little bit since I've seen you, my friend. Good to see you, man. Knackers O'Reilly. GMS, good morning, all. Chat Mum is here. Good to see you. Mon, great to see you again. Hey, gang. Hope all is well. Yes, I hope everyone's doing well. Beer. You are not drinking beer, says Charles. But you could be, actually. Charles, live on X. Great. We have an X live chat. It's mostly YouTube people. A lot of people who follow me on X and who watch the show on X, I don't think they realize they can actually take part in live chat. So it's great to see you on the show, Charles. You're drinking beer. All right. You must be somewhere else. I'm assuming it's not 9:30 a.m. In the morning for you. Great to have you on the show, Charles. Mon, you're talking amongst yourselves. Love it. GMS, yes. Pinch and a punch for the first day of the month. Is that a thing in? Was that the thing? Is that a thing in the States? Anyone watching from anywhere else in the world? Is that a thing? Here in Australia, kids do it to each other on the first day of the month. It's a pinch and a punch for the first day of the month. USA, 7:30 p.m. Okay, no problem. Having a beer, good. You do you, man. Good morning, chat fam. Pinch and, yeah, you already said that one. Fantastic. Shall we talk about it? Yeah, why not? Is sell in May and go away an actual thing? Okay, it's traditionally sell your assets in May and then just go away for a while and then come back roughly sort of November-ish, okay? Because apparently, traditionally, they're less well-performing during the off months. So we're talking the summer months in the Northern Hemisphere, okay? It's kind of based on that. Sell in May. Then not in the summer months. Sorry, it's they perform less well in the in the summer months. That's right. Southern Hemisphere, me. Northern Hemisphere, the others. And so they just sit and chill and then come back roughly November. And apparently, historically, this has seen decent kind of gains using that kind of strategy. I don't know if it's an actual thing though, so we're going to check it out. Has it been an actual thing? Let me just adjust that camera right there. You got to see my wonderful hair in the shot as well. Let's take a look and we'll see if we can apply that to gold or Bitcoin or just general stock market stuff. Yeah. So what I did is I went to my good old friend Grok. It's not all that old, but I'm going to Grok. I like to use Grok. I think it gives me a pretty decent thing. An AI generated thing like a ChatGPT isn't always going to be the most perfect thing. You could spend hours and hours and hundreds of hours doing your own research individually and all that kind of stuff. And I'll get to that comment, Christopher, when I get a chance after this little topic right here. But let's share the screen and we'll chalk it out. Brah. Here we are. Of course, please follow me on X. Can you do that right now? I have over 3,600 followers. That would be really helpful. You just go to x.com/itsjoemain. I don't know whether you need to do capital letters for the J and the M, but do that anyway. It's Joe Main. Give me a follow there. You can watch the show live. And also, I post a lot of different stuff there, every day rather than just show stuff. But we're going to go to Grok right here. So I asked, is sell in May and go away really a thing? Really a thing in investing trading? How has it tracked with actual prices? So let's read this together and we shall investigate. I'm going to move myself over here just for funsies so you can see it all a little bit better. There we go. The sell in May and go away strategy, also known as the Halloween indicator, suggests investors sell stocks in May and reinvest in November to avoid weaker market performance during the summer months. Again, this is Northern Hemisphere, May to October. The idea stems from historical trends popularized by the Stock Traders Almanac, which noted stronger stock market returns from November to April compared to May to October. Below, I'll evaluate blah, 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 blah. Historical basis and theory. The adage originates from the English saying sell in May and go away and come back on St. Leger's Day. Good to know. Had no idea. Referring to London traders taking summer breaks and returning after a horse race in mid-September. Oh, that's good to know. Good to know the etymology of it. Not the etymology, how it originated. The theory suggests lower trading volumes, reduced investor activity during summer vacations, and potential market volatility contribute to weaker stock performances from May to October. Now, they are talking about stocks specifically. We're not talking about precious metals in particular. Is talking about stocks. Okay, so understand. I'll see if this can relate to gold and if it can relate to Bitcoin as well. We'll ask Grok the same thing. So historically, data supports a seasonal pattern. Let me say that again. According to Grok, historically, data supports a seasonal pattern. Since 1950, the S&P 500 has averaged 6.7% to 7% gain from November to April, so in the good months, compared to 1.6 to 2% from May to October. Okay, that's apparently since 1950. Okay, from 1990 to until 2022, the S&P gained minus 2% on average. Oh no, gained 2% on average during May and October versus 7% during November to April. Okay, that's interesting. A 1998 study found this effect in 36 of 37. That's pretty big. Developed and emerging markets from 1970 to 1998, and it dates back to 1694 in the UK. Wow. The Dow Jones Industrial Average. It was citing its study. What I love about Grok is it also gives you the websites or the whatever that it's getting its information from. So it gives you the citations. I love that. And you can look at those. The Dow Jones Industrial Average averaged 7.5% gains in the good months, but only 0.3% in the sell in May and go away months. Okay, this pattern is attributed to seasonal factors, blah, blah, blah. Now, actual price performance. To assess whether sell in May holds, let's examine S&P performance, price returns excluding dividends. That would make sense for the May to October versus November to April. Okay, long-term historical performance, 1950 to 2022. This is really interesting stuff. November to April, so the good months, and we'll talk about the bad months. So I'm going to reference that. Good months, November to April. Bad months, May to October. Cool, the sell in May, go away. Average return in the good months, return of 6.5 to 7% across indices like the S&P 500 and the Dow Jones Industrial Average. This period includes strong months like November, highest average return since 1950, and April as the second best. Okay, so it's averaging those, okay, in the good months. The bad months, average return of 1.6 to 2%. That seems like a very stark difference between 6.5 to 7, with September being the weakest month. Okay, and July and October are stronger, but May, June, and August are flat or slightly positive. Okay, a 2023 Manulife study, whatever that is, compared a sell in May strategy, selling stocks in May, holding cash, reinvesting in November, to a buy and hold approach over 50 years. Okay, the buy and hold. Oh, that's interesting. Well, okay, here's a counter to that, I think, what they're saying. So they compared sell in May strategies, sell, hold cash, come back in November, to a buy and hold approach over 50 years. And the buy and hold investor outperformed, yes, as selling in May missed gains and incurred transactional costs. Fair enough. So there's an opposite view. Example, from 1986 to 2023, £100 invested in the FTSE, all share using the sell in May strategy, grew to nearly £1,400, whilst just staying invested grew to over £2,000. Okay, highlighting the cost of missing the strong summer months. Okay, meaning the strong bad months of the apparently bad months. Get it? Recent trends. Let's take a look at them. The more recent ones. Recent data shows the strategy's effectiveness has weakened. Okay, with May to October periods, the bad months apparently, often delivering positive returns, especially in bull markets. So it does, I think, depend, I do agree, on the larger macro cycle. Let's take a quick look. 2013 to 2022, so a 9-year thing. Not a huge data set, 9 years, but S&P 500 averaged 3.8 to 4%, but 2021, so for example, to a 10% gain. 2020, now we're talking 2020, that's COVID though, okay? So you can't talk about that. That's a statistical thing, anomaly. Yeah, S&P jumped 46%, okay? From March to November in 2020. Well, that's because of COVID. 2023, S&P 500 gained 5% during sell in May and go away, compared to 20%, okay? 5% compared to 20% from the November, aligning with the historical pattern, but still positive. So it was still positive in the summer, but it was a much more better thing to do the sell in May, go away strategy in 2023. It looks like 2024 S&P 500 rose 15.4%, one of the strongest sell in May periods ever. Yeah, okay. Posts on X noted that when May-October returns exceed 10%, the next 6 months are higher. Okay, exceptions, blah, blah, blah. Specific years and anomalies, 1987 and 2008. Well, that's because there were major crashes there. 2016, blah. Now, presidential election years. Now, this is something that ASX Trader has talked about quite a bit. The May-October period often performs better, obviously, with quarter two showing unique strength. For example, 2024's strong number rallies were attributed to election year dynamics. Yes, whatever party is in power at the time, in general, when it's that election year, okay, your stock market is going to do generally a lot better because obviously they want to be able to say, hey, look, it's the end of my 4-year period. We're coming up to the end of my 4-year period. Look how good the stock market's been, okay? And so they can kind of twist and turn things, I guess. Statistical relevance, consistency. The strategy worked in 36 of 37 markets. We did talk about that. That was over that 30-year period between 1970 and roughly the year 2000. And, this is interesting. The strategy worked in 84% of presidential cycles. That's so interesting. However, it fails in strong bull markets or years with unique catalysts. Well, yeah, like 2020 COVID. Recent weakness since 2008 buy and hold strategy has outperformed sell in May due to consistent summer gains in bull markets. Bitcoin. They mentioned Bitcoin. There you go. Bitcoin's May performance is mixed, 6 red and 5 green. Okay, so it's kind of 50-50 with green Mays averaging, suggesting the strategy is less relevant for crypto. I would agree with that. So sell in May and go away for crypto, not so much maybe for the traditional market, quite possibly, but maybe not so much in recent times. Okay, let's see. Pros and cons of the strategy. Historical support, stronger November-April returns are statistically significant across multiple markets. Risk mitigation, it avoids volatile months like September and October. Tactical trading, short-term traders can exploit seasonal patterns, especially in election years or bear markets. Here's the cons. Missed gains, positive May-October returns. I mean, selling can forfeit significant upside, transaction costs, dividends. Yes, you won't get your dividends probably. Unpredictability, modern markets. Alternative strategies, blah, 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 blah. Critical perspective. While selling May has historical merit, it is reliably overstated. The strategy assumes predictable market behavior. Markets aren't that predictable. They can be somewhat predictable, but not that predictable. Ignoring unique economic, ignoring black swan events, okay? COVID, etc. Conclusion, sell in May and go away is a real statistical phenomenon with November, April historically outperforming May, October by 5% on average, okay, since 1950. However, recent decades show weaker adherence with positive summer returns, blah, 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 blah. Historical trends are insightful, but not foolproof, and modern markets demand a more flexible strategy, says Grok. Okay, we'll go back to the camera. So, a 5% on average since 1950. Okay, so here is my opinion on that. Oh, actually, no, I'm going to go back. How has this has gold? I'm going to ask, has gold and silver prices been affected by sell in May, go away? All right, let's get Grok to answer this. The sell in May, go and suggest gold. Studies show gold often performs well in summer months, particularly September, October. That's towards the end, due to seasonal demand. Okay, Diwali, for example, Indian wedding season. Yep, and safe haven buying during equity corrections. Okay. Silver, with its dual role as a safe haven asset in industrial metals, shows less consistent seasonal patterns. Yep. Recent price performance. Sell in May and go away. What's my conclusion here? Critical conclusion. Sell in May, go away strategy has minimal impact on gold and silver prices. Had in 2024 to both metals. So, maybe not so much. Cool. All right. Is sell in May and go away a thing? Is sell in May and go away a thing? It seems to be some kind of statistical positive for that, but 5%, I wouldn't be risking it. So that's my short answer. Should you sell in May and go away? You do you. I don't tell what people to do. I wouldn't certainly do it. I don't think it's a strategy that us as investors and us as stackers would do. If you're a stacker, you're an investor. Stackers are investors. We stack for the future. We buy and hold, and we hold on for dear life. If you don't hold it, you don't own it. All that good stuff. Okay, so we generally don't do the sell in May, go away thing. I can understand from a trader's perspective that they might in maybe traditional stocks, but even then, when Grok says, if we can assume that Grok is correct on this, you don't always, assume 100%, but it's historically, on average, a 5% difference between selling in May and going away and buying back in November and then just buying and holding. If it were, for me, if it were a 20% on average difference, yeah, okay, I would really consider selling my stocks in May, buggering off and, going to the ski slopes down here in the Southern Hemisphere, and then coming back in October and November and buying back 20%. Yeah, I'd do it for that. I'd probably try it for that. 5%, no point. So is sell in May, go away a thing? Yes, very slightly over longer periods of time. Should you do it? I don't tell people what to do, but I certainly wouldn't bother. Now, in terms of, though, trading in and out of things, that's a different thing. So rotating between different asset classes, that's also a different thing, or between different sectors. So selling in May, going away means you sell for cash, sit on the cash, and then you're not in anything at that time. There's a difference, though, between that and cycling between sectors. So are there cycles? Yes, there are. There's a traditional gold and silver or traditional gold cycle where roughly from around about now, interesting, and we'll take a look at the price, around about April, May, that's when it is apparently traditional more so. And Grok didn't say that, but I've seen other people show this cycle. It's not always foolproof. That from here around about towards that kind of sell in May, go away time, gold can tend to have its time off, but there just might be more things that are more undervalued and while gold is overvalued. So I'm not of the opinion that you just sell, hold in cash, and then just wait. You just rotate into something that is quite undervalued. Now, again, as stackers, silver stackers, gold stackers, we're holding for the long term, so I don't suggest anyone sell out of their stuff. You might be dollar cost averaging into your favorite precious metals, or you might go, I don't think I want to buy gold now. I think I might want to buy some stuff that's quite undervalued in relation to gold. And then come November, for example, I might get out of those things depending on if they're becoming overvalued towards gold. Okay, but with the goal of upping your precious metals. Okay, let's see. Let's get some opinions on all of that. But I will go back to this one very quickly. Christopher said, oh my God, I remember you from Bullion Now and loved your work. Thanks. So happy to see you here. Good to see you, Christopher. Subscribed and we'll be watching you regular for gold-related news. Fantastic. Good to have you on the show, Christopher Chen. Thanks. Many of you know me from Bullion Now. All that stuff I've done there. All the videos that I created. I launched and grew the YouTube channel. I literally started the YouTube channel with my own bare hands, and I grew it to nearly 20,000 subscribers by the time I left. And you all know that. Charles says, from X, below the equator is going winter and above the equator is going in summer. Yes, I know. Thank you. Morning, Joe. Morning, Jason. I was talking about you before. Morning, stackers. Morning. 5% is large when it's 2% return as opposed to 7% return. Okay, yeah, 5% is large when it's a 2% return as opposed to a 7% return. Yeah, I can see your point there, Jason. But in general, I'm not going to worry about that extra 5. I don't need the extra 5. That's okay. The risk to me of an anomaly month during that time is not enough for me. It'd have to be close to maybe your 15 and 20%, something like that. May to October, 2%. November to April, 7%. Yeah, that 5% difference isn't as much for me. Everyone else could be different. Not enough for me to worry about selling and worrying about, what am I going to get into now, sitting on cash. What if you just, buy and hold, or rotating into things, but rather than just sitting on cash, if that makes sense. So that's sell in May and go away. Is it a thing? Seems to be. Is it statistically enough to be a thing to kind of do it regularly? I don't think so. That's just my personal opinion. You know what else is my personal opinion? And you can do you, but you, in my opinion, should be buying from Perth Bullion Exchange. I almost said another bullion dealer. Perth Bullion Exchange, perthbullion.com.au. Why? Best bullion dealer in all of Australia. You know that. I know that. I've been preaching it for a very long time. By the way, I'll come back to that. Since May of last year, when Perth Bullion Exchange started. Did you know it's Perth Bullion Exchange's anniversary today? Congratulations. Happy 1 year anniversary, Perth Bullion Exchange. Happy anniversary, Ricky. He started the store officially on May the 1st in 2024. So congratulations to Ricky. Happy anniversary. 20 or more items in your shopping cart, you get free shipping. No other bullion dealer offers you free shipping anywhere in Australia. They don't dare do it. They don't feel like they can do it. They just don't want to do it. They know about it now. They know Perth Bullion Exchange exists. They know that they give free shipping, and yet they're still refusing to offer free shipping when you have 20 or more items in your shopping cart. That's dumb. Don't be like them. Buy from Perth Bullion Exchange, perthbullion.com.au. You know they're the best. They are. Of course, my new brand partner, Mastering the Markets, masteringthemarkets.com. This is their academy, okay? Right? This is the Mastering the Markets Academy. Specifically, what I'm showing you here is their academy, which you can join for free. You'll get all the public stuff, but if you want all the private stuff, all the educator calls, all the good stuff talking about individual stocks and crypto, precious metals, what they're seeing coming down the track, and all that stuff. A lot of educational stuff as well. I'll put a link below in the info section of the YouTube page, and as part of the pinned comment later on when the show is done, to the academy. You can join up for the paid version as well, and you get all this amazing stuff. You get ASX traders stuff, as we've been talking about quite a long time now. But again, these educator calls are just great. I'll show you, for example, the one I watched yesterday. This was just so cool. I'll show you the past ones. Here's what's coming up, though. Craig Tapping's weekly market scan. That's coming up today, this evening. Okay. What's coming up? You've got Macro Sunday with Tung. You've got ASX Traders weekly market scans. That's on Sunday. But what ASX Trader did, as you know, I spoke to him a couple of times on the show, and one just recently. He did this one here. This was really cool. Just yesterday, I watched it yesterday afternoon. Where is it? Right here. Where he went through everyone's tickers. So basically, I did a live stream, and I was able to jump on, and other members were able to jump on and go, just typed in, Tesla, Boss Energy, uranium, this ticker, and he just looked at all of them for everyone and goes, oh yeah, here's what I'm seeing here. Oh, that looks good. Oh, I wouldn't be in that one because of blah, blah, blah. This is invaluable stuff. And you're also learning about his thought process about how to trade and how to invest as well, and just technical analysis, absolute guru. So that's just one type of educator call, and then you have all these other educator calls. Again, like the Macro Sundays, you've got Craig Tapping stuff, you've got Frank Watkins stuff, you've got this stuff is, I haven't even watched this stuff yet, but this stuff is really, really, where's the word I'm looking for? It is really interesting me, which is time scales as well, time cycle forecasting with Jonathan Evans. Apparently, this guy will blow your mind about how he actually predicts prices through using time cycles rather than normal technical analysis. Okay, it's kind of, now interestingly, you would kind of call it a little bit woo-woo, but I know my subscribers love woo-woo, and he's like the king of woo-woo in terms of time cycle forecasting. So you can just get all this beautiful back-end stuff that you can't get as part of the free thing. It will cost you money, 250 Australian dollars per month. I have a really good feeling, though, paying that, it will pay off in spades over time. Like you'll be, so what times that by 12, whatever that is, don't want to do the back of the napkin thing right now. You probably, I can't guarantee, but you're probably making more than that in the year in just seeing what other people are in terms of their cryptos and their stocks and all that sort of stuff. Anyway, that's something to consider, the Mastering the Markets Academy. Happy to have them on board. Let's go. Yes, happy birthday, PBE. Happy birthday, Ricky. Technically, it's not his birthday. Yes, happy 1 year anniversary. And by the way, I forgot to mention this yesterday or the day before. I'm going to go back. I can't show you. Whose other anniversary is it? Whose other anniversary is it? What date did I start the show? I started the show. My very first show was on, actually, I can find it for you, April the 29th. It is also my anniversary, and I forgot my own anniversary. It was on April the 29th. Let me show you real quick. I'll show you the first. Let's take a trip down memory lane, shall we? Give me 1 second. We're going to take a trip down memory lane. I'm going to go, good morning, Stackers. You can't see what I'm doing here. Good morning, Stackers, the channel, and we're going to go to videos. We're going to go to live, and we're going to sort by oldest. Oh, no, it's not. It wasn't April 29th. It was actually, oh, well, I'm over a year, but anyway, I'll share the screen really quickly. It wasn't the 9th. But look at this. Look. My first one, check out this one. Here's how far we've come. So April the 22nd was the first show. It has 53 views. I started this show last year. Let's quickly have a check out of the first show. All right. Wow. I'm in my dressing gown. Now, this is actually what I thought I would do. I thought it'd be cool to be like, good morning, like I'm in my dressing gown. It's like morning, like really early. I started this show. I was starting at like 7, 8 a.m., something like that. And then I realized it wasn't really working. So that was the first show. Look at this. I had that, but, no brand sponsors, terrible lighting, all that kind of stuff. And it's started to get a little bit better. We got a little bit better here. I had 186 views there. I had the thing. This was from, I don't know, the 25th of April. So we've still got it. And now look where we've come now. We've got great thumbnails. Look at this. Just amazing, hey? And we've got much better lighting, etc. We've got the brand sponsors and everything. Thank you. Happy 1 year. Yes, thank you. Happy 1 year anniversary to me too. Can you believe it's a year already that the gang has been together? It's pretty cool, hey? I must say, I'm looking so much better than a year ago. Don't you agree? Let's share the screen and go to our quick market scan. Let's do it, people. Aren't you happy? Any chart requests? Let me know. Yeah, it's happening. You can see it right here. Let's take a look at. Here is gold on the weekly time frame, priced in USD, 3,275 roughly US dollars using the tradingview.com website. It's pretty obvious. It's still happening and nothing else more to say, but it's kind of really starting to confirm itself. I'm expecting at least a test of the top end of the normal zone. You can call it the zag zone, the zig zone, whatever you want to call it right here. That's at $3,130 roughly. We're going to see bare minimum a test of there. I'm leaning more towards getting into at least the belly of this zone right here. So watch out for $3,000 and, possibly even lower, okay? If you don't want to see it go lower, then you would want to see it stop around about here at around about 2,900 US dollars. Otherwise, if it breaks through there, then you are talking probably lower. So that's good. That's fine. Good. No problem. That's fine. Bounce off there and then cool. Great. Fantastic. Do something like this. Ignore the pattern, ignore the time frame. Do kind of like that, and then you find resistance there at that 29. Then you're probably coming down to at least that $2,700 area that butts up against the mother of all trend lines. This one here that goes all the way back to 1980. I'm not going to show you the macro on that. Just believe me when I tell you. And then I think that's probably the one that holds. So I don't see us going lower than about that 2,700 if indeed we get down there. But I'll adjust my message if the data says something different, okay? But at the moment, definitely heading down further. I'll give that like a 90% chance at this stage. Cool. That is gold. Great time to dollar cost average if that's the thing you want to do. Also a great time to have a look at potential undervalued assets versus gold at the moment. Maybe you can play a little bit of a swapsy kind of game. Silver on the weekly, $32.60. Nothing to say, nothing to report. That's it. Hasn't done anything much. Got to break 35. That's it. Needs to break 35. Otherwise, no bueno just yet. We're not over it. Got to break 35. That's all you're getting for silver. Platinum, still within the range. Not a lot to say with platinum. It's a little bit boring at the moment for the precious metals, while gold is having its bit of its decline. Okay, platinum, bullish platinum in the long term. It's in the trading range between $940 and $1,010. Break 1,010. Fantastic. Onwards and upwards we go. Then we'll get to that 1,100 area. Then you'll break eventually, if we do, when we do, because we will eventually. Because, gold's going up over the longer term, silver will follow, platinum will follow. So you will have something like this. We just don't know when it's going to happen, but it will happen, okay? You'll break this downtrend line, the massive one, the big peak one, okay? The one that goes all the way back to the high in 2008 of $2,300. Once we break there, fantastic, onwards and upwards, and then we'll talk about much higher prices. We're not there yet. Platinum is still in accumulation mode, meaning this is the time where you accumulate it, right? It's the best time to accumulate during the choppiness, pretty much knowing, barring black swan events, that it will be having its breakout just like gold did. Silver will do it, okay, once it breaks over that sort of 35 area, once it gets into the all-time high territory as well. Third time will be a charm. Okay, we will break through $50 in silver, and then platinum will follow. Okay, but yeah, trading range at the moment, not a lot to say. Rhodium, I'm just keeping on top of it at the moment for you guys. $535 on this particular tracker. Need to see it clear around about, for me, about $690, $700, and then we'll talk Turkey. But so far, so good. If it breaks down below 480, then, okay, maybe not so much, not just yet, okay? Everything's just in a range at the moment. Gold to silver ratio is basically not moving. It's around about 100 still. Not a lot to show you. The Australian dollar to the US dollar is... Again, it's just not a lot of movement at the moment in anything, okay? But we are in a possible breakout situation, okay? This is where the Australian dollar might continue to strengthen against the US dollar, okay? That's going to be good for some reasons, but not good for other reasons. So it's 6 of one, half a dozen of the other. Yeah, that's all that side of it. That's all the precious metals. Let's go to Bitcoin. Good morning, Bitcoin. That's how you know. If you're an OG stacker, you know what I'm saying when I say good morning, Bitcoin. Most of you won't have any idea what that reference is. Only the true OG stackers will get that reference. Let's see. On the monthly time frame. Okay, let's do that. Here's Bitcoin on the monthly time frame, priced in USD, 94,270. I did all of that with me over here. Let me put me back over here because I like to be on the right. I like to be on the right. I like to be right, and I like to be on the right. We've just opened the month. So look, we don't know. Of course, we've got massive resistance here at the $96,000 level. Now, when you take a look at this on the macro, okay, this is the monthly time frame. Many would say, look, it's onwards and upwards from here. Yes, you could be right. We've had a great month in April. That move all the way down to, gee, what do you know? Previous resistance became support. Broke through it. It came back and tested as support. Par for course, man. Absolute par for course. And now we've had a great green month, and we've closed really at the top end of that green month. Okay, it looks quite positive. Okay, if you had a larger spike and we closed somewhere down here in your sort of $90,000 range, particularly if we had have closed below this spike here, which was around about that 88,000, I would have said, ooh, that's a pretty big spike on the monthly, and we don't like the big spikes because it says sellers are in control of the market. But we've closed right near it. Most people would be saying, oh yeah, that just means onwards and upwards from here. That could be true. Could be true. Okay, let's just take a look at things though. You've had that. Now, look, the bearish divergence may have completely played out. Okay, here is, again, on the monthly time frame, you've got a higher high on the monthly, and you've got technically a lower high on the relative strength index. Let me get rid of that. Okay, and all of this junk too. I don't know why that's there. Okay, so that signals, okay, that was definitely bearish. Okay, so back here in December, this is where people such as ASX Trader really noticed that, and he actually posted and got out of all of crypto in December last year. Okay, this would have been the signal. Had I have known more about bullish and bearish divergences and all that kind of stuff, I probably would have seen that sign too. Hindsight is 2020. I'm learning more as I go, because I am just an amateur, becoming a pro, getting towards there. All right, educating myself more. Higher high, lower high, clear bearish divergence. Now we've seen that play out over roughly 1 to 3 months. Question is that a large enough of a dip? Look, it's back to previous support. Can we say now, okay, that bearish divergence is done and we could just be onwards and upwards from here? The short answer is yes, we could be. I guess you could see technically a third move into extremely oversold. Okay. Has it happened before? Look, you can see 1, 2, 3 moves here. Okay. On the monthly, this is back in the 2017, 2018. So you did go once, twice, 3 spikes, I guess. So this can happen again. So there is room to move higher. But what do we need to see? Let's go on the weekly. Weekly is starting to get quite over, not quite over, but we're in the bottom end of the relative strength index. Let me go down here. Excuse me. Why did I do that? Don't know. That's the one I wanted. There you go, son. Here we go. Right there. We just need to see that 96,000. That's all I'm trying to say. It's pretty obvious. So there is room to say that the bearish divergence is over. We need to clear and hold that 96. And I'm just sorry, broken record. Do that. Incredibly bullish, and it's go, go, go time for crypto in 2025. Okay, the Q1 dip is over, and then we'll be probably pretty much just rocketing up for a while, and you would probably quite likely make a new all-time high in Bitcoin, which would send altcoins probably going even higher. Okay, the question becomes, what price will we get to? And I don't think it would be that much higher than the previous all-time high. Maybe the all-time high now is at 109,000. I could see 130,000, 140,000 maybe, but I don't think we're talking 200, 250,000, 300,000, that kind of thing for Bitcoin in 2025 now. I could be completely wrong, but I think it would probably butt up against this uptrend line, and that would probably be it, I think. Now, again, could be completely wrong on that, but that's that kind of thing here. So again, I'm spitballing. None of this might happen, but this kind of area here, 140, maybe 150, okay, before we see the thing. I don't think we see crazy moves up to these kind of levels. Could be wrong, but that's just me. But we need to see it close and hold above that $96,000 level for Bitcoin. Okay, that's Bitcoin. Take everything I say with a grain of salt. Here is others. Yeah, I don't care about that. Others, the altcoin market has closed technically. I didn't want it to close below, but it closed below 240 billion. Okay, it closed below the Fibonacci from this high and this low. I don't like the fact that it closed below 240. That's not preferable. But again, we're closed in the green for last month. So yeah, we could be set up for higher this month, just on the weekly and on the daily. We just need to see it close above that 240, start getting above there and get up to that 280 level. That's a really big level to watch out for at 280. You start breaking above there, that's looking quite good. Okay, but that is your zag zone. Okay, get into this area anywhere between 280 billion to 340, 350 billion is the zone where you would probably expect some selling to come in. Okay, so I would say if you close and hold that 240, watch out for probably a decently quick move to 280. Okay, so you can maybe trade that if you wanted to. Otherwise, watch out for here because you do have buyers here. You've got buyers here, buyers here. You've got buyers here, so you've got a bit of trapped money in that general area here, somewhere between the 280 billion to 320 billion. Probably more likely from 320 billion over. It's more likely sellers than buyers. At that point, you do have a bit of buying in here. So there's a little bit of trapped money and it's all in that zone right there. So you've got to watch that area. We're not even there yet. This could just tick over and back down. And if it breaks about 220 billion, bad news bears. Okay, that's probably signaling even lower continued bear market for crypto. A lot of you are saying, you're crazy, Joe. That's not going to happen. We're just going to do that first thing. Yes, you could be right. Absolutely. But the data isn't proving that just yet. We have to wait for the data. That is others. What else did I talk about? I think I talked about XRP. We'll do XRP and then I'll take some chart requests if I have some time, and the show has got a little bit more time to go over the usual hour. Here is XRP. US dollars, weekly time frame, $2.20. This is the crossover crypto. A lot of stackers love XRP if they're into crypto in the first place. The inverse head and shoulders is not playing out just yet, and we're above the $2.10 mark. That's good to see. This hasn't fully played out yet, I wouldn't say. No, I couldn't even say that's not playing out. Watch out for $2.60 as the final hurdle. So just in a trading range, you don't want to see it break below there at that $2.10. Not good. Down she goes. Okay, so while we're above $2.10, good. While we're below $2.60, can't say onwards and upwards from here in 2025. So just in a trading range, like every damn other thing seems to be at the moment, it is waiting for some confirmations. That is general crypto. I don't think I want to do anything else unless I have a specific chart request. Let's go to the comments. Yes, you did say happy 1 year, GMS and Joe. Yes, thank you very much. We have a new watcher doer, Johan. Johan, good to see you, my friend. Congratulations for 1 year anniversary. Can you do a video on silver storage options in Perth Bullion? Oh, okay. Pros and cons for individual self-managed super funds. I could probably do a separate video on that. And what I should probably do, if we're going to be speaking about Perth Bullion, Perth Bullion Exchange, perthbullion.com.au, I might even try and get Ricky onto the show. That might not be a bad idea. He is one of the show sponsors, and I like to have my show sponsors on the channel every now and then too. That's a good idea. So a video on silver storage options at Perth Bullion, perthbullion.com.au. Pros and cons for individual. Yes, I will do a video on that. I'll pop that in the my ideas thing that I have. I've got lots in there. I've got to speak to Space Miner about crystallized osmium. I've got to speak to a whole bunch of different people. I'll add that topic, and I reckon we should get Ricky on from Perth Bullion Exchange to talk about from the horse's mouth. Cool. Thank you for that, Johan. Great idea. That's going in the ideas section. Let's see. Final comments, and we should get out of here unless we have a specific chart request for anything that you would like me to have a look at. CT, what is a dressing? Oh, yeah. So is that what we call a robe? Yes, a dressing gown. It's called a. So it's the English. It's the English, the Irish, the Scottish, the Welsh. It's the Anglo-Saxon in us, in Australians, because we are a penal colony. Don't you know? We all come from thieves. So it's because it's an English thing. Yes. So it's a dressing gown is a robe. correct. Knackers, the accounting firm I work at wouldn't put it through for anyone that didn't work in a related industry. Don't know what that's about, but that's okay. Oh, would the subscription to Master the Markets Academy be tax deductible? Dang, that's a great question. And I'm going to ask that. I'll find that out. I'll see if I can find that out and let you know about that. Would it be tax deductible? It would be. Yes. Well, okay, I don't know. My opinion is it would be, because if you're set up to be a pro trader, then it's professional development. Although I think it would be. I think it at least should be. I'll double check if that's the case. Can you remind me of that question? That would be good. Thank you. Dressing gowns do rock. They do. Let's see. Go away, whatever that is. Register an ABN and maybe call it. Yeah, the trading knack. Yeah, to claim the cost as an expense. Yeah, that's exactly right. I think you might be able to. It was a general question for everyone. So it can't be deemed a cost for trading people's stock. Yeah, I'm not so sure. Let's see. Welcome. Yes. Thumbs up. Please give the show a thumbs up before you leave, because we are about to leave in a few minutes, unless I get a chart request, of which I will take a look at something. Oh, okay. Niels Hahn Dynasty has asked for OKLO, a stock. No problem. Let's take a look at OKLO. Let me do that. I love to do this stuff. Sure. OKLO. OKLO. That's I want to do that. OKLO. OKLO on the New York Stock Exchange. Okay, can someone tell me why can't I add it? Timescale. Oh, that's a comparer. I don't want a comparer. I want this one. Yeah. OKLO. New York Stock Exchange. Cool. Let's have a look. Give me one moment. Ooh, Mama Cass. Mama Cass with a ham sandwich. All right, give me a second. Let me go back here. Actually, I'll go to Grok. Let's go. All right, let's ask Grok. What is OKLO on the New York Stock Exchange? Let's find out about what it is and what it does. Give me 1 second. Let's find out together. OKLO is an advanced, it's nuclear. Yes, please, is an advanced nuclear technology company. Okay, so it's not, just bear in mind, it's not in the uranium sector, so it's not an energy stock, but it's kind of like a tech stock, okay? A nuclear technology company based in Santa Clara, California. I think I've driven through there, focused on developing compact, fast fission reactors to provide clean, reliable, formed in 2013, so it seems like it's Gen 4 nuclear, of which I am all about. Designs small, SMR, small scale power plants, primarily the Aurora powerhouse, which generates blah, blah, blah. The company also works on nuclear fuel recycling to convert nuclear waste into usable fuel. Yes, it's Gen 4 nuclear, where it uses old nuclear waste as its fuel. Amazing. OKLO aims to supply 24/7 clean energy to data centers, factories, well, basically anyone, right? Business highlights. It went public last year, okay, in May, after merging with blah, blah, blah. Signed major power agreements, including a 12 gigawatt deal with a data center. Excellent. And a Department of Defense contract for microreactor systems. Recent developments. Sam Altman stepped down as the chairman. Oh, okay. To avoid conflicts of interest. Yep. Okay, because of OpenAI. Quarter earnings, they had a loss. Okay, but that's, you're running a business. Sometimes you're on a loss. It's the first year of going public. Connection to sell in May? No. Okay, let's take a look at OKLO. Let's take a look at OKLO. This is a nuclear development company on the New York Stock Exchange. This has been a chart request from one of my wonderful subscribers watching live right now. We're going to take a live look. Number one, this is not financial advice. Number two, I am not a pro trader. I'm going to take a look at it using my amateur stuff. Okay, now, We just had a quick look at grok. Grok goes into what it is. I am personally very pro-nuclear. Okay, this is technically, I guess, this is not in the energy space, though. I think. Actually, let me just double check. What sector is this in technically? Let's ask Grok, because will it tell me it's in the energy sector? It's in the utilities sector. Okay. So utilities specifically within nuclear energy. Okay, so utilities sector. So what I'll go back and do, just very quickly, and I'll keep this here, I'm going to go back and find the utilities sector, because you want to take a look at that as the overall, okay, and see where is that trending at the moment. So let me see if I can find that. Utilities, give me a second. Is that the one? No, that's consumer staples, that's materials, that's the S&P. That's healthcare. I don't think I have utilities. Give me 1 second and I'll see if I can find that. Utilities. I want the XLU, Selected Utilities Fund. Let's go with that. Is that it? XLU. I don't know. Anyway, we'll go back to here. So we'll just go back to here and take a look at it specifically. So it apparently floated last year, but it looks like it was a merger between two things. So we've traded for a very long time since 2021 here at like between $9 and $10. And then it had a merger, okay? And then you've seen this massive move. So here's in March of 2024, we had a move up to $17. We're currently at $23.75. Right now it had a move down to all the way down to $5. Can you imagine scooping up nuclear technology related company at $5 back just last year? And this is only a number of months ago, really. This is a flash in the pan. This is 1, 2, 3, 4, 5, 6, 7 months ago. You could have bought this at $5. And in 7 months, it's gone all the way up to $60. Okay, that's a massive move. Okay, we'll do some Fibonacci and see where we are. You can see very much a bottom, a support level. Does that match up with some Fibonacci? We're going to see that, and that. What do you know it does? It matches up with the 0.786. Good to see. That's good. So massive support, and we haven't broken that support. So that's good news so far. I can't say just yet that we're out of the woods for it. We do need to get through the certain zones here. So that's good to see. Okay, solid support at around about that $17 level. That's your big line in the sand right here that you don't want to cross. That would be your big change of market structure back down, and then who knows where it could go from there. So watch for $17 roughly, big line in the sand, need to hold that as support. Otherwise, you'd even be looking at a potential shoulder, head, left shoulder. Break that, then you're probably looking at a potential all the way back down to that $5 level. Because if I do that, and then if I measure that to there, excuse me, let me do that. And then if I go like this and then measure that down to there, that's even lower. So you could possibly even come down and have a lower move. So I'm not saying this is happening, but you really got to watch out for that. You start breaking there, and if it confirms that if it's not a liquidity grab where it just fakes you out and then heads back up, okay, then you'd probably be heading down to like your under $5 level. Okay, watch out for that. That would be probably a big opportunity to scoop up at very, very low prices. Not saying that's going to happen. Just watch out for the potential head and shoulders pattern right there. Let's have a quick look. Again, very bullish on nuclear technology, but if you're bullish on nuclear technology, you may want to consider, rather than being in an individual nuclear technology company stock in the utilities sector, you might want to be more bullish on uranium in general, maybe like a uranium miners like URA, not necessarily an individual stock, because you put yourself at more risk going into individual stocks. Okay, but let's see, what's the level we need to get over into to say that we're onwards and upwards from here. What I'm doing here now, I'll get rid of you, and then I do this. If this is the bottom, then what we take is this high and this low. And we're not out of the woods just yet. Okay, so we need to clear and get through this zone right here. Through there. Got to get through there. Okay, and then we'd be looking really positive. So you probably might be finding some resistance somewhere between 33 and 43, if indeed we do. And let's go to the daily. What do we notice on here? Okay, so that's going to be a big zone of resistance probably, somewhere in there. You can actually see though, I must say, on the positive side, you can see that where the big buying zone is actually here. It's a little bit different. You can see the big buyer zone is in this area here. So actually, I would say, you've got a couple of buyer zones right here. You've got some big buying there and some bit of buying there, but really it's mostly sellers up in this area. This seems to be the big one, buying, and we're just in that range, big buying here. Here's the positives so far. Let me show you. You can see I can see some bullish divergence. I'll just see whether anything else is OBV, on balance volume. Let's have a quick look at that. It's doing it on higher volume. That's quite nice. So what you can see here is on the daily time frame, a big lower low, okay? But then on the relative strength index, it's more so just kind of flattening out, and that is a divergence, okay? Oh, piss off, stupid thing. I want that, okay? There we go. You can see that's a big divergence, okay? Where that's flattening out, but then you're seeing a lower in price. So that's even probably slightly a higher high. Yeah, it is slightly higher. So a higher low and a lower low is signaling bullish divergence. I think the volume is pretty good on that too. So that's why you're seeing this. That's why I saw this move here. Now, here's the positives. Cool. We made a play here. Okay. It failed as to break through resistance, but you then posted you posted a high there. Then you've posted a lower high. Good start. Good start. Technically, I don't know if we're through that yet, but you could call that the higher high, lower high and a higher high. We now need to post another lower low. So I would say that's the break of market structure right here. So you'd want this to break. We're back below it at the moment. You do something like this and do that and then break through. That is looking really good. You could say, okay, probably willing to take a trade on there. And then I would actually say, yeah, you break that again, I think you'd be looking pretty good, okay? And then you could say, oh, okay, possibly even a trade up to there, to that 33 level, which is where I would expect resistance. So we're not there yet. I don't think it's something that I would take a trade on just yet. I'm watching for a break of 25.50. Once we do that, I think I'd be keen to at least potentially dip my toe into that. I am bullish on nuclear. Again, I'd have to look at the risk to reward. Yeah, I'd consider it. I'll put it on the watch list. So definitely now it's on the watch list, and I'm going to put an alert at around about 25.75. You're not going to let me do that there, are you? Around about there. Let's pop an alert on it, and that's for me. So should you get into this now? I don't know. You do you. I would imagine you would want to get through this area first, of around about that 25.75 area, through all this buying range right here. You can see it's very clear, okay? Very clear that that's been resistance. You've got the buyers under there. You've got some resistance. That's your average. Get through that $25, $24 level right now. Get through there, and then that's looking possibly quite good. At least a move up to there, and you'd be talking about, if you're just short-term trading it, oh, it's about a 30% move. That's not bad. Do you take some profits there? Do you see if it gets into this area? And I would say if it careens through, if you find it, if it does this, heads up to there, bit of resistance, does something like that, and then onwards and upwards, you clear through there, that's pretty much game on. You'd be pretty clear, I'd say. You're clearing, selling, and you'd be pretty on to possible all-time highs. Okay. But not there just yet. Got to clear that level. And my alert is at $25.75 US cents for OKLO. That's OKLO. Not financial advice, not a pro. Listen to the other people. You know what I will do? On the next, what I'll try to remember to do on the next educator call on mastering the markets with ASX Trader, and that will be this one next Wednesday, where he just gets all your tickers. You just put in a ticker and he looks at it. I'm going to get him to look at OKLO. So it's going to be this one here, ASX Trader's weekly trade review and market insights on Wednesday at 12 p.m. Australian Eastern Standard Time. I am going to post in there. I'm going to say, can you please take a look at OKLO? And then I will report back, let you know what he says. Or if you want to join Mastering the Markets yourself, the Academy, I'll put a link below and you can join that. That is all my stuff. Final comments? California company doing microreactors. Yes, correct. Right down the road from you. Oh, there you go. Got to run. See you later, Mon. Yeah, I've got to go too. I like micronuclear specifically. Yeah, okay, fair enough. Ladies and gentlemen, you have watched Good Morning Stackers with me, Joe Main. You get another one tomorrow, the last day of the week tomorrow. What shall we talk about on Friday? Ooh, could be an interesting one. You never know. Let's see what happens in the news, what happens in the gold, silver, and Bitcoin prices and all that. Now that we've started May, you never know. This next 24 hours roughly could be an interesting indicator. We might wake up tomorrow and see Bitcoin at over that $96,000. Then we got to talk, and we'll have a talk. Okay. Get your tasty beverages ready. We are going to do the final synchronized slurp and we dance it out, don't you know? Because this has been
Good morning, Stack.
Oh yeah, we're feeling fine.
Good morning, Stack.
It's podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do that.
Synchronized slurp.
3, 2, 1,
Now
go.
we're on the move.
Good job, people. Great session. Love your work. Stay safe. Stay informed. Keep stacking whatever you're stacking. And I will see you tomorrow live. Have a great day.